Welcome to the Total Wealth Academy radio show, where wealth includes much more than just money. It includes family, fitness, romance, and all the other parts of a balanced life. Listen and learn how 70% of the millionaires in America made their money using real estate. Now your host, real estate investor and consultant, Steve Davis.
Hello and welcome to the Total Wealth Academy radio show. I am your host, Steve Davis, where as always, we're here together working hard to improve our financial IQ, to improve our financial literacy, because high school and college do nothing to teach you how to build wealth. They just teach you how to get a job. It's very, very difficult to build wealth with a job alone. You really need to make about $300,000 a year or more to be able to do that, and very few people are in that position. What I want to talk about today is a couple of case studies of how real estate makes you money and why it is superior to really any other investment. And that sounds like a bold claim, but it's not. You have to be aware, and I know most of you know this, but 9 out of 10 millionaires in the United States used real estate to become so. 9 out of 10. It outperforms all other investments pretty heavily. If you compare the average deal that we do at Total Wealth Academy, the members are doing, their internal rate of return is around 20%. If you look at the stock market over the last 7,500 years, the rate of return is about 7%. So we outperform the stock market by about 3 times. You make 3 times as much money to invest in real estate as you would to leave your money in the stock market. And the funny thing is, everybody knows this. But if you look, where's everybody's money at? In the stock market. And then they claim to be diversified because they have different stocks. But they're all stocks. That's not diversified. I've had this bet for the last 25 years on the radio that anybody who wants to can put up $300,000 in the stock market on January 1st. I'll put up $300,000 in real estate January 1st, and we'll meet December 31st. Whoever makes the most profit gets the other person's $300,000. Now, in 25 years of saying that, no one has ever taken me up on that bet. And the reason is, everybody knows that real estate outperforms the stock market. You know that. I know that. Everybody knows that. But think. Where is your money? It's in the stock market, isn't it? Now, you know that real estate outperforms it, but for some reason, you don't own any real estate. It doesn't make any sense other than people are just flat out afraid. They're fearful, and they won't take action. They won't do anything with their lives. They just throw their money in an IRA or 401k, and then they let somebody throw it in a stock market or mutual funds. And they don't realize that that's not the highest and best use for their money. In the United States, and really worldwide, the highest and best use for your money is in real estate. But people don't do it out of fear. You know, they're afraid they won't be able to lease it if they buy it. They're afraid they may pay too much. They're afraid, what if a recession hits? By the way, we want a recession to hit. We make more money in a recession than we do the up market. People don't realize that real estate makes money in both the up and down markets. If you go back to 2008 or 9, let's say you had 20 rent houses and you were making $8,000 a month profit. The recession comes. Your houses lose value, 20, 30%. Do you care? No. You're still making $8,000 a month. See, we make money in both the up and down markets. And we're not going to sell in the down market. We're going to wait for the market to recover. It's not if it's going to recover, it's when. So real estate offers more stability, lower risk, and a higher rate of return. But again, not everybody's doing it. It's just crazy when you think about it. So let's look first at commercial real estate and how commercial real estate deals work. The power of the commercial deal is that we control the value of our property. With single-family houses, the market controls the value of the property. The market controls the value. Why? Because the value of single-family homes is based off of comparable sales. What is every other home, just like your home, sold for? Whatever every other home has sold for, that's what your house is worth. But when it comes to commercial real estate, it's totally different. We control the value of our property. You can literally have two identical apartment complexes, commercial property, two identical apartment complexes sitting side by side on the same street. They're the same number of units, same size units. The two complexes are identical. One of them is worth $50 million. The other one's worth $30 million. Why? Because the one that's worth $50 million is properly run, 95% occupied, perfect condition. The one that's worth $30 million is beat up. It hasn't been taken care of. It's 30% vacant, and the rents are $100 to $200 a month below the other property. See, the value of, by the way, which one of those do you want to buy? You want to buy the one for $30 million. Why? Because you can fix it and make it worth $50 million. So, why does this occur? Because the value of commercial property is based off of a thing called net operating income. Net operating income, or NOI. So when we buy a property, we're going to buy a property with a low NOI, knowing that we can raise the NOI and as a result, raise the value of the property. All right, we'll talk more after the break here on the Total Wealth Academy radio show. Thanks for listening.
An old joke. When is the best time to buy real estate? 20 years ago. When is the second best time? Today. And this is truer than ever with the impending recession and the correction that's going on right now. Real estate investors are going to make millions of dollars in the next few years because of the recession. You should take advantage of it as well. To find out how, please attend our free sample class to learn more. Go to TotalWealthAcademy.com. TotalWealthAcademy.com. Just click on the free sample class button. Thank you.
Welcome back to the Total Wealth Academy radio show. I am your host, Steve Davis, where we're talking about how with commercial real estate, we can change the value of the property by taking action. Unlike single family, where you've really got to wait for the market to go up. So let's look at a deal where we literally doubled the value of a property in 2 years. This was a 200 or so unit in Houston that we purchased for about $4 million. Now, why so cheap? Because it had literally $900,000 in deferred maintenance, almost $1 million worth of repairs needed. There were 60 vacant units in need of anywhere from minor to major repairs. The rents were $150 to $200 below market, and it was full of drugs, thugs, and prostitutes. It was a doggone wreck. It was a horrible property, but in a relatively good neighborhood. It was the worst property in the neighborhood. In fact, 3 or 4 other properties in the neighborhood had recently been rehabbed. And of course, they're complaining about this one. So we go in and we go to the bank. This is a fun story. We go to the bank and tell them we want to buy this. They literally kicked us out because the property was so bad. They kicked us out 3 or 4 times before they agreed to finance the property. Part of it was they didn't even realize, because they wouldn't even talk to us, how cheaply we had gotten the property and what our plans were. So we put together this 5-inch thick business plan, and I kid you not, it was at least 500 pages. It was I guess it was 4 inches thick because it was a 4-inch binder. But it was intense. And finally the bank goes, look, we'll finance this for you, but we're going to want a very high capitalization rate. And the reason they wanted a high capitalization rate was because to them it was high risk. So they're looking at it going, look, this thing is beat up. It's full of drugs and thugs. It's just a piece of crap. It's high risk. Where for me, I see it the opposite. To me, the worse a property is, the lower risk it is, because you can fix it. To me, the higher risk is when you go into a property that's already fixed up. What are you going to do to improve it? It's already fixed up. How are you going to add value to it? Very difficult. But when you got a piece of crap like this, it's very easy to go in and improve it and fix it and change it. So they agree to finance it for us. They want $1.5 million total out of pocket. That's the down payment and closing costs. Be aware, today this deal would be probably about $2 to $2.5 million down. This was 10 or 15 years ago. But bottom line, we got it for $1.5 million down. Now, where did we get the $1.5 million? Well, the leader of the deal, known as the sponsor, he's the one who buys it, rehabs it, manages it, does everything. The sponsor does everything. He put up $100,000. Then 14 other members of Total Wealth Academy each put up $100,000. So that's where we came up with the $1.5 million. And they were able to use their IRAs, their 401ks without tax or penalty. By the way, the minimum is $50,000 to do a deal, to participate in one of our deals at Total Wealth Academy. But for this example, let's pretend like everybody put up 100 so the numbers are easy. Again, the sponsor puts up $100,000. The passive investors, 14 of them, put up $100,000 each. Now remember, the passive investors do nothing but put up the money. The sponsor does all the work. So the action steps after we closed are as follows. The first thing we did was completely rehab the exterior. Now, this strategy scares off bad tenants. This is why we start with that. See, bad tenants know that when a company comes in and they start making major changes to the condition of the property, they know they're on the way out. So that helped us eliminate probably 30, 40, maybe even 50% of the bad tenants. When they saw us resurface the parking lot, put up security gates, put up new fencing, put up new lighting, paint the buildings, replace the roofs, they're like, yeah, we're on the way out. So the vast majority of them left. The next thing that we did was begin to rehab the 60 vacant units. The vacant units. And those were easy to lease because we had a perfect property now. So that didn't take very long. We even moved some of the good tenants into the newly renovated tenants, some of the good tenants that we inherited. Then we began eviction of all the bad tenants, the drug dealers, the thugs, the prostitutes. We just started eliminating them. Now, this took about 6, maybe even 9 months to complete. This is not an easy thing to do. But again, the passive investors don't do that. The sponsor takes care of all of that. Then we raise the rents on all of the existing tenants as soon as their current leases ended. This is all. Oh, we also added a couple of kids' play areas, well lit, safe, and added 2 laundromats. Now, how many of you can figure out what this is going to do to the NOI? It's going to raise it. It's going to raise our net operating income, which raises the value of the property. See, when we purchased this, the net operating income on this property was only $400,000 a year. So when you take the $400,000 and divide it by the bank's cap rate, which was 8%, that gives you a value of $5 million. So when we bought it, it was worth about $5 million, and that's what we paid for it. By the time you add up our purchase price, the rehab, and the closing costs, we paid $5 million for it. That's all it was worth. So I want you to be aware that we didn't steal this property. We paid full price for it. As it sat. Full price. It was worth $5 million. We paid $5 million. But as you can imagine, from leasing all the vacant units, raising the rents on all the rest of the units, we've raised the NOI. So at the end of our second year, we had a new NOI. When we purchased it, the NOI was $400,000 a year. At the end of 2 years, and we weren't done yet, but at the end of 2 years, we had a $600,000 a year NOI. We then go back to the bank and we say, look, we want to refinance this so we can pull our down payment out and go buy another one. They say, no problem. Let us go inspect the property and do what they have to do. So they go look at the property. They come back to us and they go, wow, great job. Property looks great. NOI is great. We will refinance this with a lower cap rate. Remember, they wanted a high cap rate initially, 8%, because it was high risk. But now it's a low risk deal to them because it's in perfect shape, it's leased up, it's well managed. They gave us a 6% cap rate. So to determine the value, you simply divide the $600,000 by 6%, or 0.06. The new value of that property after 2 years, $10 million. Now remember, we purchased it for $5 million. It's now worth $10 million. When we refinanced it, we walked away with close to $4 million. We had put $1.5 million in it. When we refinanced it, we walked away with $4 million, and we still own the property. The way the $4 million was distributed is 25% of the $4 million goes to the sponsor, the guy and his family who did all the work. So he got $1 million of it. 75% goes to the passive investors, or $3 million. So bottom line, if you had had $100,000 in this deal, you would have received a check at the end of 2 years for $200,000, and you would still have your $100,000 in the deal. Now here's the kicker. Your $100,000 in the deal is now worth $200,000. You turned $100,000 into $400,000 in 2 years by being a member of Total Wealth Academy. All right, we'll talk more after the break here on the Total Wealth Academy radio show. Thanks for listening.
When you put money in the bank or pay your insurance premium, they take that money and go buy real estate with it. Why? Because it gives the highest rate of return and is the lowest risk. This is called passive investing. Due to some recent changes in the laws, you can now invest the exact same way. Total Wealth Academy can show you how. Visit TotalWealthAcademy.com and attend our free sample class on real estate investing. That's TotalWealthAcademy.com. Thank you.
Welcome back to the Total Wealth Academy radio show. I am your host, Steve Davis, where we've just gone through the way that the passive investors at Total Wealth Academy are making money. And this was a case study of with commercial property. And this is an exceptional deal, don't get me wrong. But what's happening is every time there's a recession, this happens over and over and over again. This is one of the reasons why we love a recession. We make more money in a recession than we do in up market. And don't get me wrong, we make money in the up market. It's the up market. But you make twice as much money in a down market. It's crazy. And you guys in the stock market get slammed in a down market. You lose money in a down market. And then you have to wait 4 or 5 years just to get back to zero. You know, a lot of people don't realize this, but what rate of return do you have to get in the stock market if you lose 33%? If you lose 33%, most of you think, well, I need a 33% return. No. You need a 50% rate of return, because the amount of money you have in the stock market was reduced by 33%. So to get back to where you were, it's going to take you 7, 8 years just to get back what you lost, just back to break even. It's just a horrible, horrible, I'm sorry. Stocks are highly ineffective by comparison to real estate or even owning your own business. It's just the next to a CD at the bank, it's the lowest form of investing there is. You know, you're a bottom feeder if you're in the stock market, and that's why you get those low rates of return. And a lot of it comes from a misconception that people have that the stock market was designed to build wealth. It wasn't. It was designed to keep up with inflation. And that's about all it does. It was never designed as a wealth building tool. It was designed to help the average American keep up with inflation. But is that your only goal? You just want to make sure your money doesn't lose value? No. Your goal is to build wealth. Every one of you needs to get your money working harder for your family. When you leave it in the stock market, you're in the lowest form of investment that there is, next to putting it into a CD at your bank, and you get slaughtered in a down market, and the stock market has crashed 18 times in the last 100 years, so it's going to happen again and again and again and again. But that's okay. It still gets you that 7%, 7.5% rate of return, even with the ups and downs. But you need more than that if you're going to build wealth for yourself and your family. If you're ever going to, quote unquote, retire or become financially independent, which is the real goal, you've got to get your money into a vehicle that can take you there. I use this example in my Saturday class. If I go out and buy the most expensive Ferrari there is and pull up in front of your house and say, hop in, we're driving to England, would you get in the car with me? No. Wrong vehicle. You can't drive to England. It's an island. What do you have to get to England? You got to have a boat, a ship, or an airplane to get there. So most of you are in the wrong vehicle, the stock market. You're never going to achieve your financial goals until you get some of your money into a vehicle that has the potential to get you where you want to go. Real estate is that vehicle. That's why it accounts for, 9 out of 10 millionaires in the United States. So there's the commercial side of it. And you really need $70,000 or more to go directly to passive investing. If you got $70,000 or more, if it's in a IRA, 401k, 403b, any retirement account, and you can use your IRA and 401k without tax or penalty, which is sad. Less than 10% of Americans know that. Less than 10%. And that's not anecdotal. I have done survey after survey after survey, and the average person does not know that you can use your IRA or 401k to buy real estate. Doesn't even know. See why the rich get richer? You can bet they know. You can bet their kids know. And that's where their money is, in real estate. So let's look at it from the single family point of view. One of the reasons that real estate's rate of return dominates the stock market is because the stock market only makes money one way: appreciation. For you to make money with the stock market, it has to appreciate it, and you have to sell the asset. You have to lose the asset to get to that money. With real estate, you make money four ways, including one that comes to you on a monthly basis. A thing called cash flow, positive cash flow. And this is what Warren Buffett was talking about when he said, never rely on a sole source of income, a job. Always invest to create a second source of income. That's an important point. Second source of income is what Warren Buffett told you to build. So was he talking about stocks, mutual funds, gold, silver, crypto? The answer is no, because they don't produce what? Income. They don't produce cash flow. What Warren Buffett was talking about were businesses and primarily real estate. So what have you done to follow Warren Buffett's advice? Have you bought any income producing assets yet? No? What are you doing? You're ignoring Warren Buffett? That's not a wise decision financially, I can tell you that right now. But anyway, you make money 4 ways with single-family real estate as well as commercial. It's cash flow, appreciation, equity buildup, and equity capture. Cash flow, appreciation, equity buildup, and equity capture. Let's look at this in a standard little deal. This is a case study of a little deal I did. Oops, sorry about that. A case study of a deal I did over off of West Green, off of I-10 here in Houston. I'm rounding all these numbers off, but I purchased that thing all in for $170. The ARV after repaired value for that property was about $200. Now the $170 included purchase price, rehab, and closing costs. I made this property perfect. New flooring, new paint, new appliances, new countertops, we resurfaced the cabinetry to make it look brand new. I did have to do some roof work. Foundation was sound, plumbing was sound, electrical was sound, HVAC was sound. But I mean, I made this property perfect, beautiful. And I leased it, and that lease produced me about $400 a month in cash flow. Literally, I gave myself a raise of $400 a month the day I closed that deal. And nobody can take it from me because it's my property. I can't get fired from it. It's a true raise. So the first way that deal made me money was cash flow. My total out of pocket on that deal was about $20,000. So $400 a month times 12 months is $4,800 a year. Divided by the $4,800, that was a 24% rate of return. Now I want you to think about that. What rate of return are you getting on your money? In the stock market, at the bank, are you getting a 24% rate of return? Might want to consider getting some real estate for yourself and your family. All right, we'll talk more after the break here on the Total Wealth Academy radio show. Thanks for listening.
If you have money in an IRA, 401k, or other retirement account, you can use it to invest passively in real estate without tax or penalty. Our average rate of return is 3 times that of the stock market and mutual funds, with much less volatility. If you have over $70,000, you can start passive investing today. Please attend our free sample class to learn more. Go to TotalWealthAcademy.com. That's TotalWealthAcademy.com for reservations. Thank you.
Welcome back to the Total Wealth Academy radio show, where we're talking about how owning a single family home makes you literally a rate of return in excess of 100% the first year. We've already seen that the cash flow alone brings you about a 24% rate of return. But remember, you're making money 4 ways on every little single-family house you buy. Cash flow, we've discussed. Let's talk about appreciation now. It's only about 3% a year. But 3% of 200,000 is another 600,000. I'm sorry. Wish it was 600,000. Is another $6,000 in profit for you and your family. Well, 6,000 divided by the 20,000 you've got in it, that's a 30% rate of return. Again, you need to think, where's your money at? Are you getting a 30% rate of return? Then we've got principal pay down or equity buildup, the third way that it makes you money. That's not a lot either. It's only about 2.5%. But 2.5% of $150,000, which is what you've got financed, is another close to $4,000 or another 20% rate of return. Then the fourth way that this deal has made you money is a thing called equity capture. Equity capture is the difference between my all-in price, $170, and the value of the property, $200. See, I picked up, the day I closed that deal, $30,000. My net worth went up $30,000. That's a 150% rate of return. 150% rate of return. Again, please think about where you've got your family's money. Is it in the highest and best use to serve your family? It's not, is it? What are you, lazy? I know you don't love your family. I know you just don't care. None of that's true, is it? You're not lazy. You love your family. You care. You're just scared. You think real estate's risky. You think you can't do it. You think you don't have enough money. You don't have enough credit. You don't have enough time. Blah, blah, blah. All those excuses are BS. So many people come to me and they say, Steve, I've got a family and a job. I just don't have time. So does every member of Total Wealth Academy. Everybody's got a family and a job. Don't make excuses. Get out there, get some real estate in your portfolio. Even if it's just one little single family house this year. Because once you start seeing those 24, 30%, 20%, 150% rates of return, you'll more than likely move more of your money over to real estate. But have the courage to do a little deal. Sorry for the sales pitch, but here it comes. We'll walk you through it. Our members have unlimited question and answer with the wealth coaches, all of whom are competent real estate investors. We'll walk you through it and make sure that you don't make a mistake. While I admit real estate investing is difficult if you don't know what you're doing, it's actually fairly easy if you do. If you know the best practices, if you know the business model from one end to the other, if you know how to lease, you know how to screen, you know how to market, which we teach all of that at Total Wealth Academy, it's relatively easy. And those of you worried about time, you got to understand, my mentor, Bruce Richards, had 123 rent houses. 123. He managed them himself and vacationed out of the country 2 weeks a month. So don't lie to yourself and say rental property consumes a bunch of time. Your quality of lifestyle will go up when you buy real estate. It will go up. You will have more time for family, more time for fitness, more time for romance, more time for travel, because you'll be able to quit your job and buy back that 50, 60, 70 hours a week that you're giving up. Excuse me, I'm reading an email here. Mustafa, this is a lot of personal information. I don't feel comfortable reading this on the air, but as soon as the radio show is over, I will reach out to you. The good news is you're in the perfect position to begin real estate investing. You've done a lot of things right. You know, you beat yourself up because of your age and what you've got saved up. Don't do that. It's not too late. It's going to take you about 2 years to make as much money from your real estate as you're making at your job. You're plenty young for that to be a reasonable amount of time. But yeah, I'll reach out to you after the radio show, but do not be discouraged at all. All right, anybody who does have a question for me or a comment, or maybe you need me to clarify something that I said during today's show, please feel free to email me. I love emails. It's exciting to me. It's fun. Email me. It's steve@totalwealthacademy.com. steve@totalwealthacademy.com. Hold on. Yeah, that's the right email. I'm sorry, I just got another email, but it's just a sales pitch of some type. And you can ask me anything. It doesn't have to be about what we talked about today. Maybe you've got a fear. You've got a special circumstance in your life that you feel like is a challenge and you need help overcoming that. Please feel free to email me any type of question whatsoever, even questions about eviction, questions about financing, questions about how to get your first deal. I don't mind answering anything. Just send me an email, steve@totalwealthacademy.com, steve@totalwealthacademy.com. Okay, Kara went to our free sample class last week and loved it. But didn't understand how the passive investing works. You know, Kara, that takes about 3 hours of training to really explain how passive investing works. Kara, go ahead and take the Saturday class. Oh, you did sign up just after the class. Yes, I see what you're saying now. My apologies. Okay, you signed up. Yes, the Saturday class, I spend about three and a half hours explaining exactly how to passively invest your IRA, your 401k in real estate. So yes, just like I say on the show, you will learn how to be a passive investor in that Saturday class. And thank you for enrolling, and thank you for the kind words about the free sample class. Okay. All right, again, my email is open. It's steve@totalwealthacademy.com. steve@totalwealthacademy.com. And you can use that 24 hours a day, 7 days a week. Anything you want to know about real estate investing, about building a second stream of income for yourself and your family, feel free to email me, steve@totalwealthacademy.com. Okay, this is from Lucas. What is that book that you always recommend? The book that I recommend, there's two books that you should read. The Richest Man in Babylon by George Clason and Rich Dad, Poor Dad by Robert Kiyosaki. You can find the reading list at totalwealthacademy.com/books. Okay, it's 2:58. I assume we're at the end of the show. Okay, there's the music. All right. I want to thank everybody for listening today. I hope I shared something that was both encouraging and enlightening. Take care, and we'll talk again tomorrow.
You've been listening to the Total Wealth Academy radio show. Please remember that this show is for entertainment purposes only and should not be construed as legal, tax, or investing advice. Always get a professional opinion before making any investment decisions. To find out more about coaching and consulting at Total Wealth Academy, visit TotalWealthAcademy.com and attend one of our free sample classes on real estate investing. Thanks for listening. Have a great day.